Elon Musk yesterday on the earnings call scared the poop out of many Tesla stock investors, and that's why Tesla stock is down today. Am I buying more? Is it a buying opportunity? And what happened? Let's go through everything. We also got some interesting news unrelated to yesterday's earnings call, so I'll go through that as well. While Tesla did miss earnings estimates, Tesla stock in the after hours was actually up after the earnings report came out. It only started going down, going down seriously after the earnings call started because Elon really scared many people. And that is because Elon indicated that the factory in Mexico could be delayed. He's not indicating that it could be built very quickly because interest rates are high. Therefore, he thinks that they may need to delay the factory. Another major reason why Tesla stock has gone down so much today is that this is the first time ever that Elon Musk and Tesla will be slowing down on purpose due to the uncertain nature of the macroeconomic environment for a company that's known for going balls to the wall 100% of the time. This is a jarring statement. However, the near-term impact is that the company is no longer going to be able to grow at its 50% year-over-year target, and instead will have to settle for 30% or less, says Farzad, depending on macro forces. Elon specifically emphasized that it is impossible to grow 50% year-over-year indefinitely, and many people are interpreting that Tesla is no longer going to grow at 50% year over year, perhaps ever. And while to some this comes as a surprise, if you look at my valuation model on Patreon, which I published a little while ago, you will see that in the long term, I am definitely not counting on Tesla to grow 50% year over year in my base case. I think it's possible to do it for 1 year once Tesla releases the next generation vehicle, but to grow at 50% every single year, I already assumed that Tesla is not going to do that. And despite that, I am all in Tesla stock in my stock portfolio. I also saw some people seriously disappointed by Tesla's gross margin, excluding regulatory credits, which came in at 16.3%. But again, when I look at my valuation model, I'm actually projecting lower than that. So I know some Tesla stock investors will be disappointed to look at that number, but I am not at all, because it is above where I see Tesla later. And when I personally invest in Tesla stock, I invest based on my base case and my bear case. If you are inside of my Patreon, I'm talking about my higher bear case. So I'm not changing my bear case or my base case at all. My bull case I might need to change a little bit, but I don't base my investment decision based on my bull case. I only look at my bear case and my base case. But I see a lot of people lowering their base cases, actual base cases, and that reflects in their price targets. My base case remains unchanged, but I do have to say that many, when they look at my base case, they think, Matt, you're too conservative here, you're too conservative here, you're too conservative here, you're too conservative here. Well, maybe now you see why. Running my own businesses, I learned that one thing that you can always expect is the unexpected, and you can expect a lot of problems. And having done my own research and looking at my price that I'm willing to pay for Tesla stock per share that I think is fair to pay, I can look at today's Tesla stock price and say, it's a buying opportunity. The AI opportunity has not changed. The FSD opportunity has not changed. Tesla still has the very best AI team, Elon said, and he said that the team is only getting better. So if FSD, for example, is a big part of your investment thesis in Tesla, then the earnings call did not change anything fundamentally for you. Does it mean that we will not go down from here? Oh, we could go lower, certainly a lot lower, because the sentiment right now is very negative. And if that happens, of course, I will keep buying Tesla stock, and I will buy it with a bigger smile on my face, knowing I'm getting a better deal. I will be shocked if we go back all the way to $100, but if we do, I will be very happy to buy a lot more Tesla stock. Also, check this out. I'm going to use a simple moving average. I set it to 365. And generally speaking, look at what happens if you buy below the line. So you would have bought here the first time. Maybe you bought some more here, here, and some more here. And yeah, overall you did all right. Now you may not buy nowhere near as much or not at all over here, and you would have missed out on that. If you, for example, wanted to enter Tesla stock around here because it didn't dip below this line anymore, but you prevented yourself from buying here at this local top because you could have bought here, or if you just waited, you would have bought right here. In this way, you would have actually ended up with more shares, but this approach is a bit risky because you can easily lose on a lot of upside if you don't buy in. But it prevents you from buying at the very top, and then you can enter perhaps at a more favorable price. And the reason why I'm showing you this because you need to see where this is at right now. So for example, you buy around here and here and here, and you avoid buying around this price. So it goes up here, then it drops quite a bit here, then it goes up a lot. We all know this, but you would have missed out on a chance to buy here, which maybe you would have said, you know, maybe it's all right because the stock rallied to about $60 and then it dropped more than 50% and you avoid that extreme volatility and you miss out on huge gains here. Now, right now, if you use this, you would have bought some here and you would have bought some here, actually quite a bit. And right now, we are slightly under this line. So if I had other opportunities to invest in, and I'm not only investing in Tesla stock and I want to be a bit more careful with my dollar cost averaging, I'm looking at this chart right here, and now I'm a bit more interested because relatively speaking, I am getting more of a fair deal right now. Now, if you want to go an extra mile here, what you can do is you can look at this moving average and then you look, for example, right here, the moving average was at 269 roughly, and you don't want to buy until it drops by roughly 30% from the moving average. So we would take 269. I just took out 30% from that number and I get $188 roughly. So here the stock dropped until about $209. So you would have not bought here. And if you're trying to enter Tesla stock with, let's say, a lump sum, but you also have other big opportunities, and if you miss Tesla stock opportunity, you don't mind, maybe it's something to think about because later you would have entered Tesla stock around here. So over here, the moving average was at about $276. So you would buy at about $190. And after that, we know what happened. Tesla stock went almost to $300. If you want to be even more careful, then I would take 50% from this number. So the moving average was at about 276. So 50% of that would be about 138. That would have been a pretty good entrance point. You would have bought not exactly quite at the bottom, but it would have been pretty close. And you would have only been down for a very short period of time. But if your threshold is 50% of the simple moving average, it's very likely that you will never buy into Tesla stock ever again, unless something seriously goes wrong. If you look at Tesla's history, 30% down from the simple moving average, yeah, that has happened quite a few times, but even that is not overly common. So if you definitely decided that you want to be in Tesla stock, it's quite a risky strategy if you don't have a lot of other alternatives to invest. But if you are already heavily invested in Tesla stock and you are perhaps thinking about increasing your position, but you don't really want to, and you only want to do that if a really good opportunity presents itself to you, that's something to think about. But your valuation model should trump all of these technical things. If you invest for the long term, then you want to base your analysis on fundamentals and the long-term potential instead of basing your whole investment based on what's happening in the short term. One thing that is certain with Tesla is volatility. There's going to be a lot of movement, and rarely is it just from one side to another side. There's a lot of ups and downs when Tesla moves sideways. So even then Tesla technically moves sideways, there's still a lot of movement up and down. And so right now the moving average is at about $223. So if we take 30% out of that, we get $156. So if you are looking for an even better deal, then maybe I would wait until that, but I don't really do that. I just dollar cost average because I'm all in Tesla stock in my stock portfolio, and I think that is the absolute best opportunity. So if Tesla stock suddenly 5x's or 10x's very quickly, I don't mind buying Tesla stock at a slightly higher price because I know the opportunity is there. The fundamentals are just too strong. But if I was to allocate, let's say, some of my real estate into Tesla stock, real estate that I'm really happy holding right now, then I would want to be below 30% that moving average. That's where I would start thinking about it. It doesn't mean I would do it, but I would start thinking about it. Anyway, in my view, just based on what Tesla stock has been doing recently, right now, you are already getting a pretty good deal even without looking at the fundamentals. And if you go back and you look at what Tesla stock has done, it has never been flat. It always moves up or down, but not just sideways. It's always up or down, up or down, up or down, and some of these movements are very violent. And then the big moves up start, these are even more violent than the moves down. So yeah, I would expect a lot more of the same, a lot of ups and a lot of downs, but no sideways. It's gonna be up or down, and eventually way up. My assumption is that we are going through another consolidation phase. We went through 2 of these periods already, and if you don't mind possibly missing out on these huge gains and you want to have a better entry point, then I would wait for Tesla stock to drop noticeably below that simple moving average. But the problem is, if right now already we are, let's say, right here, that time is never going to come for you. But maybe we are not here. No one really knows. Maybe right now we are right here, perhaps. Or maybe we are right here. If you don't know how to add a moving average to your chart, just go to Yahoo Finance, click on indicators here, and click on moving average, enter 365 here, and click save, and you will have your moving average. Some people said that Elon on the earnings call was down, in a bad mood, depressed maybe even. I think he was probably mostly just tired and probably really sad about what's going on in Israel right now. And Elon also made it quite clear that Tesla is not really going to advertise big time. Their focus is on cutting cost. And basically, we were told that it will take 18 months for positive cash flow contribution from Cybertruck, which could mean 2 things. Number 1, the margins will hurt, of course. And number 2, the price of the Cybertruck will be very fair and market share will be taken aggressively. As a long-term investor, of course, I like that. I think some people did not like when Elon said that the Model Y price, when you look at the monthly payment, hasn't really changed. And I think many investors were hoping that Tesla would start advertising very seriously. But no, the focus is not on advertising at all. Elon thinks there's something to gain from advertising, but he was very, he wasn't committed to advertising at all. He doesn't seem to like the idea of advertising. And he said there's no point in letting potential customers know about your product if these potential customers, cannot afford your product. The reason why investors do not like hearing that on the call is because the Tesla Model 3 and Model Y now already cost less than the average car. For example, a Model 3 is now $8,700 less than an average car, and a Model Y SUV is $3,700 less than an average car in the US. And that's before all of the EV incentives. So some people really did not like Elon saying that on the earnings call. But I don't think this is the point that Elon is really trying to make. I think what Elon is trying to say here is that, look, if our Model Ys were the exact same price as Toyota's RAV4s, then no one would buy RAV4s. They would buy Model Ys only. Model Y is already the world's best-selling vehicle, so obviously people are buying that vehicle like a lot. But what he is trying to say here is that I think is what he's saying, is that we can make the Model Y less expensive going forward. It can actually become a cheap vehicle, not just affordable or less expensive than an average vehicle in the US, but actually much cheaper than the average price of a vehicle in the US without making the vehicle worse. And if we can do that, then why would we bother with all of this advertising, I think is the point that he's trying to make. He didn't say it exactly like that, but that seems like the kind of thinking that Elon has right now, because he specifically pointed out the RAV4, and he basically wants the Model Y to be cheaper than the RAV4. He didn't state it as a goal explicitly, but he said that if the Model Y was cheaper than the RAV4, then no RAV4s would ever be sold pretty much almost at all. In other words, everyone would just buy the Model Y. But Gary Black really did not like Elon blaming high interest rates, because if you buy a Model Y today, you will pay $902 per month. If you bought a Model Y a year ago, you would have paid $1,108. So there is actually a meaningful decrease in your monthly payment. And while it is meaningfully cheaper, I think what Elon is trying to say here is that he is mad that it is not ridiculously cheaper after all of these huge price cuts. I think both points are valid. I think Gary has a good point here, and I think if you think about 5 to 10 years ahead, Elon has a point too. But the moment Elon said the payment is about the same, I knew he was going to get a lot of flack for that, because the reality is it really depends which time frames you compare. My room is getting a bit hotter and this jacket is a bit thinner, so I changed. Now let's go through the rest of today's news. Tesla China begins deliveries of the new Model 3 Highlands in late October. It's pretty much official now. And the wait time for this refresh Model 3 is now 6 to 9 weeks. This is the longest for the Model 3 this year, as you can see here. And I think that's good news, because the ramp is going pretty well so far, it appears to me. On the earnings call, Elon said that Tesla is already advertising and that there is something to be gained on the advertising front. He cited cost and high interest rates as a big issue. But this right here is a huge moment for Tesla. Tesla energy gross margin was 24.4% in Q3, up 33% versus Q2, and up 163% year over year. This is actually a massive bombshell. The energy gross margins now exceed the automotive gross margins, and the energy business is actually easier to scale. So I am really happy with Tesla's energy storage deployments. And here's what James says. He says Lathrop is still at only about 50% capacity, and fixed costs still have room to fall further still. The cost of LFP batteries is also falling very quickly, and this will translate into lower megapack manufacturing costs. This is very bullish. I fully agree with that. With Megapack, storage recognition is a bit lumpy, so it can be a challenge to calculate everything precisely, but no matter how you cut it, the energy margins are extremely strong right now. Jeff thinks that Tesla is under-promising and over-delivering, and I agree with him on this particular point. The energy business is still a small part of Tesla's business if we look at Tesla's net income, but from this business, the revenues are up and the costs are down, so net income is rising fast. The future here is very promising because the margins are so high right now. Tesla regulatory credit sales exceeded analyst expectations, and we may have another record year for regulatory credits. Also, a shout out goes to James for being more accurate than pretty much everyone else, at least on these two specific numbers, which are really important. During the earnings call, Elon also said that it will be very difficult. Specifically, there will be enormous challenges in reaching volume production and making the Cybertruck cash flow positive at a price that people can afford. And it will take a year to 18 months before it is a significant cash flow positive contributor, said Elon Musk. We also had confirmation for the first time from Tesla that there are indeed over 1 million reservations for the Cybertruck. We already knew about that, but this is now officially confirmed. This comment from Elon really upset many investors. Elon said, "We are laying the groundwork to begin construction, but we want to get a sense of what the global economy is like before we go full tilt on Mexico factory. I am worried about the high interest rate environment." And he said that if you know where interest rates are going, he can then tell us when Tesla will start seriously building the factory in Mexico very quickly. And if interest rates go down, then we will go full tilt, basically, implying that it's going to take a little while. And this comment, it does have a point. This answer I really do not get. If we are worried about the affordability of the Model 3 and why on earth would we not want to accelerate the launch of a much more affordable model? Makes no sense. But I think the reason why Elon Musk is saying that is because Tesla is planning to make the next generation vehicle in Austin first. So the factory in Mexico is no longer as crucial as before. If we delay it, it's okay because we can build more cars in Austin first. In fact, that's exactly what Elon emphasized on the call. He said, "We have so much land here in Giga Texas." Now, there was this comment from Elon on why FSD price dropped. "We just wanted to make it more affordable so more people could try it. Over time, the price of FSD will increase proportionate to its value. We want to make it more affordable." This is one of these times when, Elon is playing a game. He cannot say, "Oh, people are not buying FSD as much, so therefore we want to cut the price," or, "Well, we don't think that full self-driving is going to be solved very quickly now." They can't really say it. I already said that before. If you didn't see my video, then Tesla dropped FSD prices. That, I think, was pretty bearish for FSD overall. Like I said many times before, I think that FSD is going to be sold sometime before 2030 ends. And many FSD bulls will call that super conservative, but despite that, I am still all in Tesla stock in my stock portfolio. Here is Gary's take about the earnings call. Most people I spoke with tonight thought that Tesla earnings call was not good to terrible. Lots of excuses about macro, new CFO seemed unsure, no answer to the question about auto gross margins bottoming, $25,000 car should be the highest priority, didn't address the question why not buy down loan rates to 2 to 3% rather than cut prices by 20% to address affordability. As one portfolio manager said to me, "With Zach gone, Elon seems surrounded by people who are afraid to disagree with him." But Gary doesn't seem to actually be disappointed by the earnings call. His price target actually remains $300, unchanged from before. I personally thought the call was okay and we still love Tesla stock. I appreciate the transparency by Elon and his team to explain the challenges ahead. I still think relying on price cuts rather than advertising is a mistake when the average person is clueless about how easy Teslas are to charge and how inexpensive they have become. But I'm excited Tesla is starting to advertise Cybertruck deliveries will be a huge catalyst, and I continue to believe Tesla 2024 volumes and earnings will beat consensus estimates. My Tesla price target remains at $300. And I have been seeing a lot of comments like this one. Some weird comments, but they all have this weird common theme. I used to kind of be on the fence about the whole advertising thing, but have definitely come around. My dad is a great example. He thinks Elon is great and even has money invested in Tesla, but is afraid to get one for his next car. We live in Chicago area, and he's afraid it will get too cold to start. This is what I mean. These stories are weird. I have a feeling there are a lot of other consumers out there like this. Overall, I have been seeing a lot of comments like this one, where a seriously strange reason is given for not buying a Tesla vehicle, which you would think would never happen, but actually it happens. I never had any issues with our Tesla in really cold weather. The car performed really well, just the range becomes a little bit less. That's because you need to heat up the cabin. And we got this report from Reuters that Chinese suppliers for Tesla will invest in the northern Mexican state of Nuevo Leon, where the automaker Tesla is planning to build a new factory. State officials said yesterday the planned investments include $700 million from this one group and $260 million from another company. So clearly progress is being made at Giga Mexico despite Elon scaring everyone yesterday on the earnings call so much. What's also a bit funny is that the Tesla Cybertruck pilot production line has higher installed annual capacity than the Ford F-150 Lightning line. And Tesla's cost cutting continues. If you missed this, you can already do this. You can go for a test drive in certain places in North America and do the test drive without any staff being present. And this is a bit of a disaster for Ford. Ford just recalled 35,000 Mustang Mach-E vehicles over battery issues again. The recall is in response to a battery problem that can cause these electric vehicles to suddenly lose power while driving. And this problem cannot be fixed with an over-the-air update that people will need to go to an actual Ford dealership. So we have seen GM recalling 100% of both EVs due to battery fires. We have seen Ford recalling F-150 Lightnings due to battery fires, and now Ford is recalling these Mustang Mach-Es. And read this part right here. According to the Part 573 safety recall report, the estimated percentage of vehicles with the defect is 100% when it comes to this Mustang Mach-E. Ouch. Imagine entering a highway where you have to merge and you need to accelerate to merge successfully. You decide to commit to the merge, you decide to accelerate, and you are halfway through, you almost completed your maneuver, but you need to accelerate a little bit more, and then you lose your power. That's pretty dangerous. So yesterday, Lucid hit a new all-time low, and today, so far, it is down again, and it is perhaps about to become a company that is no longer going to be a company worth over $10 billion in terms of its market cap, which is still slightly above 10 billion. And unlike with Tesla, I don't see many positives here. I am now editing this video and there are 7 minutes before the market's close left, and Lucid dropped even further. The market cap is now actually under $10 billion. This is a new all-time low for Lucid. Oh, ChargePoint begins rolling out next connectors, enabling Tesla drivers to use its charger network. It's of course going to be easier and simpler to charge at Tesla's charging network, but if you are in a location where it's going to be quite a bit more convenient to charge at ChargePoint, it's not a bad thing. I think this overall helps with the EV adoption. And remember that many automakers are adopting Tesla's charging standards, so all of these other automakers will be able to, all of these cars will be able to charge at ChargePoint once they actually put Tesla's charging standard into their vehicle. So this is good. I mean, overall for the EV adoption rate. Also, let's keep in mind that Tesla's not opening up every single supercharger to other brands, so more chargers are still needed. Toyota and Lexus just made a deal with Tesla to adopt Tesla's charging adapter, I guess. Drive Tesla Canada reports that indeed it is official, and this will start in 2025. And the room got a bit cold again, so I changed again. There were a few more significant things covered on the earnings call. If you haven't listened to it, I suggest that you listen to it in full or that you watch the summary from Tesla Daily, Rob Maurer. By joining my Patreon, you will get access to how much I think it is fair to pay per Tesla share each year between 2023 and 2033. If you sign up for the investor tier of support, you will also get my valuation model of Tesla stock with a 45-minute video walkthrough. And YouTube says you should watch this video next, but if you haven't finished watching that discussion about the future with Elon Musk, watch this one first. My name is Matt Potius. Like and subscribe if you haven't yet, and I will see you in the next video. Thank you so much for watching.